Good evening and welcome to Orange Genie's webinar on off-payroll working in the public sector and the other autumn statement fallout. I'd just like to extend a welcome to our existing clients who are listening this evening and also to those from ContractorUK. My name is Daniel Moss and I'm the Sales and Marketing Director here at Orange Genie. I've been previously qualified as an accountant and serviced contractors directly for over 15 years. We felt it best I present to you, the contracting community. Some of my presentation is based on a series of webinars we have been holding with a large number of agencies in order to get their feedback, concerns and plans going forward. As a company, we are accredited members of the Freelancer and Contractor Services Association, the FCSA, and my CEO is also a board member. This presentation should last about 25 to 30 minutes, allowing time for a Q&A session at the end. I will place you all on mute while I go through the presentation. As so many have turned out, we've decided to keep the Q&A questions to type questions only, that way stopping any background noise interfering. The question box is on the right-hand side of your screens. It will be open throughout the session, and I encourage you to type in your questions as they occur to you, and I will try to answer them as we go or at the end of the presentation. We'll be sending a copy of the slide deck to all of you, together with answers to any questions you've raised. Okay, so let's get started. Hopefully you're all aware that the Chancellor made a series of announcements in his autumn statement that will have a negative impact on you, on your recruitment agency and potentially on your client. I'm sorry to say that these changes are likely to increase the tax you have to pay and ultimately reduce your take-home pay, so this is important. It's a good bit of news there for you already. I've set out in this agenda, which I hope will cover everything that's relevant and will have an impact on you now or in the future. I will do my best to cover off all of the points. As a bit of background, I've sat through at least 6 meetings with HMRC and HM Treasury, attended HMRC meetings with REC, APSCO, IPSI, large agencies, small agencies, accounting bodies and others. My CEO, Graham Fisher, also attended a Chatham House Rules meeting with the Chancellor the day after the autumn statement, and together with other members of the Freelancers and Contractor Service Association, I was one of the first to see the latest iterations of the online digital tool, which you may be aware of, and if not, I will be describing it later. You will see we have submersed ourselves in this, and it is safe to say HMRC really have done their homework this time. Before I move on, I want to make clear that Orange Genie believes the changes announced both in this statement and in the Budget 2016 will damage the growth, flexibility and well-being of the temporary workforce. We made these points in the meeting with the Chancellor and came away with a clear impression that the government genuinely value the flexible workforce, but we have an image problem and are seen it as serial tax avoiders. And until the supply chain partners are seen to act as a catalyst for compliance and best practice, the contracting community will continue to be targeted and undervalued. On a positive note, we were asked to urge the industry to participate fully in the fairer tax consultation. Before I get into any detail and you start to wonder if this is relevant for you, here's the very short version. Until now, public sector contractors operating through their own limited company, you, have been responsible for determining whether their contract falls inside or outside of IR35. Contractors inform their accountants of current status, who then calculate their taxes based on that decision. And if HMRC later decides the contractor was wrong and they've underpaid their taxes, the contractor will be liable not only for back taxes, but also for HMRC fines and interest. After the autumn statement, and likely to come into effect on the 6th of April 2017, everything changes. The responsibility for that decision, and ultimately for any back taxes or fines payable as a result, if it's wrong, will fall on the public sector body that engages you. So that's why this is important. Clearly you need to know if you're working in the public sector. The public sector is defined as organisations covered by the Freedom of Information Act 2000, as amended. The FOI Act includes government departments, legislative bodies, armed forces, local government, NHS, schools and further and higher education, police, the British Museum, BBC, Channel 4, security forces, and various publicly owned companies, including, for example, Transport for London. Unfortunately, the list is 38 pages long, so there are lots. Easiest way to check if you're not sure is to ask your client. If, however, you're working for an outsourced private sector supplier, for example, Mighty, Capita or G4S, you will not be affected by these changes and you will continue to determine your IR35 status. The third point has been a huge sigh of relief to the agencies. The third point has been a huge sigh of relief to agencies. The original proposals gave responsibility for both the IR35 assessment and payment of correct taxes to the agencies in certain circumstances, but they have listened and made a fundamental change. HMRC have decided to make the public sector bodies alone responsible for the IR35 assessment, so this is a major victory for common sense and will take a look and take a lot of the heat and anger out of the debate around these proposals, effectively getting the agencies off the hook. This may well make no difference to you, but the fundamental issue remains that the IR35 status decision has been taken away from you. So if you are told that your assignment is outside IR35, little will change. You will invoice your agency or client, if you are employed through your PSC directly by the client, in the normal way. You'll be paid gross and account for taxes on the basis that you're outside IR35 as usual. However, the agencies are now on the hook for any unpaid taxes by you, the PSC contractor, where you are deemed to be operating inside IR35 and where they are the fee payer. The new proposals force them to put you on their payroll and deduct PAYE and national insurances as if you are an employee. Now let's turn to the exciting part, tax. Just to reinforce the point, whether public sector bodies informed you that the assignment is outside I-35, there is no change other than the flat rate VAT changes that I will deal with shortly. If a public sector body has informed you that the assignment is inside I-35, the agency will have to payroll you, the contractor, as if you are an employee, or they may ask you to work through agency POE or through umbrella employment. You'll be paid as if you are a permanent employee through their RTI payroll software, although you will have no employment rights. No rights to statutory payments, such as statutory sick pay, statutory maternity pay, and statutory paternity pay. No pension contributions, and they will not account for any student loans. Unfortunately, if you're with a large agency and their payroll is over £3 million per annum, they will also have to deduct the apprenticeship levy from you. The agency or the umbrella will have to go through all the usual checks, right to work, P45 and so on. If you are unable to supply a P45 showing your current tax code, the agency will ask you to complete a P46 form and will place you on a tax code BR or OT in the normal way. Incidentally, the public sector proposals have removed your entitlement to 5% expense deduction where you are inside IR35. We are told that this was done to ensure agencies do not have to make changes to their payroll software. There are double taxation provisions, and all PSC contractors will need to complete their annual self-assessment tax return and may need to claim back any overpaid taxes. However, we're still waiting to see detail of this. Finally, it is interesting to note that other than being able to request an explanation as to the basis of which the I-35 assessment has been made, there is no appeals process. Okay, so we look into the history of I-35. I-35 legislation has a history of failure from its original drafting in 2000 through to the current proposed changes which have been universally condemned. The original legislation, as drafted in 2000, placed responsibility for the assessment of each assignment with the hirer, but fierce lobbying of the then business-friendly Labour government by the CBI successfully brought about a last-minute change, and responsibility for assessment and payment of tax moved to the PSC. as a limited company contractor. This made enforcement virtually impossible. HMRC's investigations had to be opened against individual PSCs and information on contracts. Actual working practices and so on had to be obtained from the whole supply chain, often from companies who had no direct relationship with the contractor or the hirer. As a result, each investigation can take years to complete, have rarely risen above 200 to 300 in a year, and a few prosecutions have been successful in the courts. Given the hundreds of thousands of assignments entered in each year, it is little wonder that many PSCs are willing to take the risk that they won't be caught and calculate their tax outside R35, thus avoiding substantial tax payments. We continue to see a number of rogues promoting schemes that take advantage of the lack of enforcement. From the last bullet point, you will see HMRC's estimate of the problem in the public sector. I have to say that these estimates have been challenged and not substantiated. But the sort of numbers attract the eyes of ministers and HM Treasury, whether we agree with them or not. In the past few weeks, we have seen evidence of a rise of enforcement activity. A recent court case confirmed that HMRC had opened over 100 investigations against a media company where the contractors had worked on assignment with the BBC. In the last couple of weeks, we have seen HMRC using the onshore intermediaries' reporting data to open investigations against a large number of PSCs operating through one specific hirer. But IR35 case law is complex, and you can rarely answer an IR35 assessment with a simple yes or no answer. That would make our lives a lot easier. So HMRC have been developing a digital tool to help the public sector bodies to determine IR35 status. Okay, so the off-payroll digital tool. Let's turn our attention to this. The public sector bodies will use this to determine your IR35 status. We met with HMRC's digital developers following the autumn statement for a demonstration on this digital tool. The tool was an alpha prototype, an automated interactive questionnaire. It will be ready for a private beta launch towards the end of January, and a decision will be made in late February when to go public, with a launch date set for 1st of April. I've highlighted a pretty fundamental difference in what the developers are saying. The tool is based on HMRC's view, whereas HMRC are telling us through the summary of responses document that it will be based on case law. And in my view, here lies the fundamental flaw of the public sector changes and why you should be concerned. The public sector bodies will be encouraged to use the digital tool, which will give HMRC's view, and we have already seen that HMRC believe 90% of public sector PSC contractors are not operating compliantly. Having seen the questions in the alpha prototype, now up to 55 questions, I can almost guarantee the digital tool will determine that most contractors will be inside R35. And I wonder how many public sector bodies will seek to argue with HMRC over its use, particularly when there are financial penalties should HMRC disagree. Although you may think with these proposals use of a tool isn't your problem, the end results could be. How will agencies break to you that you are now going to earn 20 to 30% less going forward? And what are the chances that HMRC will notice a contractor moving from outside R35 to inside R35 on the same assignment and potentially open an investigation? We have already seen our first public sector body insist all contractors go through umbrella employment. They will not allow contractors to work through their own PSC. And what's going to happen when it's extended into the private sector? Okay, quite a topical part of what happened in the autumn statement was the VAT fallout as well, so I'm going to cover this now in the presentation. Some questions are popping up as well, partway through. What I'd like to do, as there's so many questions, is address a few of these at the end and then give you all a comprehensive answer over email. Okay, so we move on to the flat rate VAT, flat rate scheme. From reading the forums on Contractor UK, I've added this slide for those of you not familiar with a flat rate scheme, or those of you who have been confused by its calculation. Clearly, this has been a real talking point in the contractor community, and its effects will be felt by everybody operating a PSC. We had been warned. HMRC said the deliberate abuse of a loophole in the VAT scheme by a small number of service providers, principally focused on supply teachers, nurses, social workers and van drivers, would lead to everybody losing out. And they've been true to their word. I feel particularly aggrieved for those contractors operating legitimately and genuinely in business in their own right. However, HMRC estimate that some 41,000 new companies registered between March 2016 and August 2016 have taken advantage of this loophole. In response, a new 16.5% VAT rate is being introduced from April 2017 for businesses with limited costs, such as a labour-only business. HMRC estimate they will save £690 million over the next 6 years. Okay, so let's have a quick look at the effect of the introduction of the new 16.5% VAT flat rate. Okay, so here's a working example. I've taken a £160 day rate and worked it over a 39-week period. This generates an income of £43,680, and if we apply VAT at 20%, creates a liability of £8,736. If we apply the flat rate VAT at 13.5%, which is the current rate for an IT contractor, this creates a liability of £7,076. If we move down to the bottom here and look at the VAT profit, one less the other creates a profit of £1,660. Now let's fast forward to post-April and see what this scenario looks like. So with the same scenario, £160 for 39 weeks, similar income, VAT liability still the same at £8,736. And then the new FRS rate at 16.5% creates a liability of £8,649. Again, down the bottom here, if you take one away from the other, this creates a saving of just £87. This hasn't come as a surprise, and clearly it's unfair on most contractors who are operating legitimately, as ultimately they're the ones who are going to suffer. It's just highlighting those key numbers in the calculation. Okay, the next slide here, looking again at the flat rate calculation, this time we've incorporated the 5% allowance, which is going to drop out for public sector workers. I'm just going to pause here. Lots of questions are coming through. Please keep them coming. As I mentioned before, we will address as many of these questions at the end, if not in full, after the webinar. So just to cover off a 5% allowance, it's extremely disappointing that 5% tax-free allowance will be removed from most contractors affected by the R35 changes. In our response to the policy consultation, we argued that such an expense allowance would be even more justifiable post-reform, given resulting financial complexity and necessity for individuals' financial affairs to be properly reconciled annually. However, government seems intent on exasperating the unlevel playing field that they have created, despite their commitment not to change the basis of R35. Okay, so in this example here, another working example is 5% allowance. What we've basically done is, in the public sector only, you will lose the whole of a 5% expense allowance, which in effect, the calculation post 5th of April here shows £2,188 would be the amount for 5% allowance after the new VAT adjustment. This therefore means that there's an extra £437 in extra taxes to pay post-corporation tax. So again, another real kicking for public sector workers. Okay. So what I'm going to do is take these numbers now into a take-home illustration so you can get a feel of the real impact behind all of this from from maybe from a personal point of view. Let's get into highlighting the key numbers in this calculation here. So in this example here, and please excuse the small font, I've taken the two changes. This time I've calculated it on a £200 a day rate. This first illustration here shows an example as if you were operating outside IR35, and if you look at the bottom here, this shows a net monthly income of £3,296.23. Okay, so we'll quickly talk you through this example. So again, this is using a £200 a day rate. It's basing on the 16.5% VAT new flat rate amount. So that's the amount you can expect to take home. On the next slide here, if I move across to inside IR35, you'll notice the bottom number here, which is the key number, the net monthly income drops to £2,739.55. Again, using exactly the same numbers. What does this mean? It means that if you were previously outside IR35 in the public sector, you're crossing 5th of April and moving into inside IR35, where you lose your 5% expense allowance and have a VAT adjustment, you'll actually be £556.68 worse off per month. And that's quite a significant amount of money. What's also worth noting is that you'll be actually £83 worse off than even if you were with an umbrella company. So for once, the umbrella company take home actually is outweighing a PSC limited company income if you're inside IR35. So something worth noting there. Okay, I'm going to move on to other announcements which came within the autumn statement as well. Okay, so we mentioned the 5% expense allowance of PSC contractors working in the public sector and a court inside IR35. I won't go into any more detail there. I think I've given you an overview of that. Other points to notice was the consultation on fairer tax for people doing similar roles, which I mentioned earlier on in my presentation. In his speech, the Chancellor mentioned a fairer society and people working alongside each other in similar roles should be paying the same tax. Not much detail is available at this stage, and we expect a consultation to follow in due course. This could be significant for our sector and proves HMRC has no idea of the value of a temporary workforce. Penalties for enablers of tax avoidance schemes. As announced at the Budget 2016, the Chancellor restated the commitment to deter enablers or promoters of tax avoidance schemes through introducing a new penalty regime. The government will also remove the defence of having relied on non-independent advice as taking reasonable care when considering penalties for any person or business that uses such arrangements. A consultation has already taken place and we can expect further draft legislation soon. They've also aligned employer and employees' national insurance. The recent OTS proposals for the closer alignment of tax and NI will start being implemented from April 2017. Changing to an annual, cumulative and aggregated ACA approach for calculating employee national insurance will be simpler for employers, and OTS research shows that from the employer perspective there will be more winners than losers. We'll see how that works out. Salary sacrifice. As expected, there will be changes to salary sacrifice, with most benefits being taxed the same as the cash they replace. Exclusions of pensions, low emission cars, childcare and cycle to work schemes. Okay, so what are you doing as a contractor? My recommendation would be by the 5th of April 2017, most contractors will be working on new contracts. So having your contract reviewed now is not really going to benefit you unless it does go beyond 5th of April 17, which at that point it might be worth having it reviewed. However, information we're given that is if contracts already span that date, it's going to be very difficult to change the status of them. I would suggest arranging a face-to-face meeting with your accountant to discuss these changes. Questions you should also ask yourself: are my skills transferable to the private sector? This will then enable you to stay outside IR35 if the opportunity arises. I expect to see a lot of this happening. Do you generate a lot of business costs and therefore commence plan? Sorry, I start again there. Do you generate a lot of business costs? If you do, then I suggest you look again at your VAT status and perhaps look at registering for standard VAT. That way, being able to offset a lot of your VAT costs, which will help negate the changes in the FRS. As previously proved in my calculations before, if you're operating inside I-35 in the public sector area and don't feel you can get out of this, then you may want to consider moving towards umbrella employment. This will also give you opportunity to close your limited company down and look at exploiting reserves of the business. This is something to consider as well, and something which we'll be discussing. Okay, so what are we doing here at Orange Genie? Effectively, in some of our products will be business as usual, so we'll continue with our umbrella service as normal, servicing the education sector and our construction sector as well. Option 2, which we're also working on, is looking at support services for contract reviews and supporting agencies and end clients as well through Orange Genie compliance. And thirdly, we'll also be looking at offering outsourced agency POA services to agencies that potentially don't have a payroll solution. Okay, so that's my presentation finished. I'm going to now move to questions. And what we're going to do is we've got lots and lots of questions which have come in, which I thank you for. I'm going to pick a few out and answer those. And apologies we can't get to all of them. However, we will give you a comprehensive written answer which will accompany these slides when we circulate them at a later date. Okay, so the first question I've got here is from Samuel O'Brien. He's driving and listening to the webinar. Thank you, Samuel. He said, is it true that the client will pay the employer NI? How will this affect an umbrella arrangement? Is there any benefit in umbrellas? Essentially, no. Moving on to further questions here. We've got a question here from James Abbott. Are the likes of Capita, KPMG outside in every case, James? No, they're not. They won't be outside at all. They've moved firmly within the scope. Okay, question here from Colleen McKenna. If the digital tool determines you are inside I-35 and you have been in the public sector a few years, will HMRC look to reclaim tax from previous years? We don't believe they will. However, this is HMRC who we're talking about here, who have and on occasions retrospectively looked to reclaim tax, but at the moment we're being told nothing is being happening. Okay, so Darren Mills, I think your question perhaps came in before a slide which I spoke of earlier. Darren's question is, if I'm caught by R35, surely I might as well use an umbrella company, as I will then at least receive holiday pay and sickness benefits. That's correct, yes you will. Why would I continue to use my limited company, as there are no benefits any longer, are there? I think if you are in the public sector, fall inside R35, I think your assumption there is correct. Unfortunately, the benefits of using a limited company now are very limited. What we're informed is that the deemed tax calculation will be based purely on the total amount which you invoice, so therefore any expenses, pension, etc., anything you want to offset, you're going to receive no benefit from, or if you do get any benefit, you may have to capture at the end of a tax return when you submit it. and HMRC will then offset it at that point. But ultimately, at the moment, no, we're not seeing any real benefits of it at all. Okay, we've got a question here from Michael. I wonder what allowances, if any, may be made for expenses, travel, training, equipment, etc. At the moment, it only looks like training potentially could be about the only allowance. HMRC have really locked it down on this occasion, and we're just working on some calculations this morning. It's very difficult to really put anything through at all. So of your list there, I'd say that the training is about the best bet, but that may even have to be submitted via your personal tax return to get the tax relief at that point, and not through your limited company. Okay, question here from Neil Cameron. It's probably the question that's on the tip of many people's tongue, especially working in the private sector. What is your assessment of the probability and timescales for a private sector rollout of the new legislation? Well, your guess is as good as mine. The statement actually stated that they weren't looking, the draft legislation stated they weren't looking to roll it out into the private sector, but I think if you speak to any expert, we all feel it would just be a matter of time. So we'll just have to watch this space. I think what will happen is HMRC will perfect the digital tool, make sure that it fully works properly in the public sector space, and as soon as they gain confidence behind it, I think they will definitely look to then roll it out. Okay, a question here from VJ Mystery. What if you had kudos reviews and confirm you are outside R35? Does that still apply? No, it doesn't. Reason why is it's the public sector body who determine R35 status. So unfortunately that won't support you in any way at all. Again, it's a good question. Why wouldn't you look to kudos? But yeah, the legislation is quite firm that it's actually the public sector body who determines status. There's lots of questions here. Thank you for keeping coming. Okay, so a question here from James McNulty. My contract is due to be renewed in March 2017. What should I be looking for regards to these new rulings, my agency or the client? Should my contract clearly indicate R35 status? I think if you're looking to renew in March 2017, you need to be really, well, firstly speaking to your accountants, be getting the correct advice. I would also be pushing your agency to perhaps be pushing your end client to give you some assurances on what that looks like. But fundamentally, and again, this is a discussion we're only having earlier today, it's really outside the contractor's control. The only control you have got is whether you can work in the public sector or the private sector. That's the only power you have. When it comes down to determining status, you can look at your contract, you can write it as best you possibly can from an R35 point of view, but ultimately it's not your decision. It's outside of your control. So my advice would be look at the slides I said earlier, is decide if you haven't got transferable skills and can't move over, then seriously question whether you continue to operate for a limited company. If you can transfer your skills, then probably now is the best time to do that. I've got a question here from VJ Mystery. When does the public sector need to tell you of their decision? I mean, ultimately this is coming into play in April 2017. What we have been clearly indicated is that the public sector bodies have to let us know within 31 days of what status is. At the moment, that's the only real outline or guide that we've got on that. So yeah, coming in April 2017, but the public sector body has to let you know within 31 days. Okay, we've got a question here from Anna McMinn. I'm picking this question because, well, not because I can give you a straightforward answer, but again, it just backs up that we need to get further clarity. So Anna's question is the public sector body pays a large private company such as BT or Capita to deliver IT services, who in turn pay contractors via an agency, will those contractors be affected by these changes? The contract with the agency names the client as the large private company, not the public sector body. It's a great question, Anna. I'd love to give you an answer, but that's where we just need to get further clarity. However, we will go away, we'll exhaust our resources, and we will get you a comprehensive answer on that question. I thought it was just worth mentioning because, unfortunately, we don't have all the answers at this point. We've got a question here from Matt. What is the definition of a limited company cost business in relation to the flat rate VAT? I mean, effectively, it is purely in relation to any consultancy contracting PSC businesses. We've looked at the definitions as well to see if we can work anyone around it. They are effectively referring to you guys, so there's no real work around that. But we can get you a proper definition in full response to your question, Matt. We've got a question here from Samuel O'Brien. How would I pay for my business insurance? Effectively, you still pay for it for your limited company. The issue you fundamentally have is that the deemed calculation would be on your invoice value. Therefore, that's what the tax would be calculated on. It's just then the net amount, which would be passed to you as salary, will actually just be passed as insurance costs instead. So effectively, it's going to come out of your net pay. We've looked at it, we feel it's grossly unfair. Perhaps HMRC might review it at a later date and might bring in a rule at a later date. At the end of the day, this is all coming in April 2017. They have got opportunity to change their minds if they want to. But we looked at that as well. And it's insurance along with your accountancy fees as well. So standard costs of in a limited company. They unfortunately will be deemed in the deemed calculation as a gross amount for tax to be deducted. The net amount will just have to come out of what effectively would be paid to you net as a salary. That will just be passed off as a cost instead. But again, we'll address that in full for you, Samuel. So question from Nick Peters. Nick, I know you kindly sent some questions in prior to the webinar. I've read that using the new digital tool will not be mandatory. Is this correct? And if so, why? It isn't mandatory at all. Why? Because actually HMRC rely on case law. So if they chose to investigate you, they would open up a case. They would refer back to case law, and ultimately that's how the process would follow. Because of that, HMRC don't want to rely on the tool for the rules, which again puts us back at where I-35 has always been. We're back in a grey area on that one. So that's my view on that. Again, we'll get you a comprehensive answer. Nick, again, another question. I read that the new rules will not apply to consultancies. What is the definition of a consultancy in this context? Effectively, this is the sort of the outsourcing model. So this is looking at models which are third parties outside of scope. I know that there was a good reference I read in an article the other day which addressed this as well. What we're hearing at the moment is that if you're looking at potentially operating through these consultancy type models, you should be approaching this with great care, as we think it's just a matter of time till HMRC put some clarity on this, on that side. Okay, just a further question, well, further information that's come in. My CEO's just messaged me to say that Capita and KPMG will not be covered by the proposals if they are an outsourced service. So just wanted to clarify that quickly. Again, like I said, we are going to get comprehensive answers out for all of these questions, which will be worked on by us. So Mark, who's a valued client of ours, has made a good comment here. The irony of contractors developing the digital tool that will make them leave the public sector. Yeah, I like that, Mark. That's very, very good. Okay, I'm trying to keep up with questions. They're pouring in at the moment, so I'm just going to pick a couple more because I've no opportunity to answer all of these, unfortunately. TC Consulting, good question. How realistic do you think it is that contractors can negotiate rate increases? Question as good as mine. Early signs which we've had, again, where there's a bit of noise coming from the public sector bodies, they've said to us, which they probably would do, there's no money to increase rates. That's their stance for the moment. However, they are hugely fearful of this, especially where contracts span April 2017, as they're very fearful that people will just actually up and vote with their feet, therefore could have the potential just to walk out mid-contract, and therefore they lose valuable skills because of this. So they've got huge fear on that as well. So again, let's watch this space. We'll see what happens there. Okay, I'm just going to pick one more question here. Okay, one of the questions here that I've got is about the answers. We receive answers to all questions via email, or just the ones we have asked. All answers will be circulated, okay? So you'll have the answers to everybody's questions on here. They're literally pouring in. I apologise, but I can't answer them comprehensively now. However, we will work on this as a team and get answers out to you as soon as possible. What we're going to do is leave the question board open for the next 15 minutes. So please do put your questions into there. Any question you might have, and we will follow these up. But we've had a huge amount of questions coming in. It's just very difficult to keep up with them all. I want to thank you for attending our webinar today. On behalf of Orange Genie, it's been a pleasure to present to you. And like I say, even off of this forum, if you want to get in touch with myself or anyone within our team, please feel free to give us a call, as we'd be more than happy to discuss this with you offline. I thank you again for attending. Apologies I can't answer your questions in full, but we will get answers out to you. Thank you very much.